many sights to see. And when I look in
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday, the 26th day of April, and this is the Daily Report. Gold is currently trading at 1153.70, under a little bit of pressure today, trading anywhere between $2 and $5 lower. In terms of our closing over in New York, the COMEX Gold futures closed near steady on Monday, but nearer the session lows. Now, the U.S. dollar index has climbed steadily and crude oil prices eroded during the trading session. Greece's huge debt burden and the European Union International Monetary Fund's efforts to get a handle on major uncertainty that is also somewhat limiting buying interest in gold is present. Due to a lessening of investor risk appetite, June COMEX Gold closed up 30 cents at 1154, and that's according to Jim Wyckoff over at Kitco News. Now, we are forming an interesting pattern in the marketplace. It is simply called a bearish harami. Bearish harami correlates to what the Western trader calls an inside trading day. It's composed of these two candles here. What happens is, after a defined uptrend, you get a market that closes within the real body and closes somewhere near the center. Actually, harami means pregnant in Japanese. As a reversal pattern, it is one of the less strong patterns that we have. It's one of the weaker ones, and it would have to be followed by a strong confirming candle on the following day, which would be a black candle. And that candle would also, let me see if I can draw it in here, would also have to take out the low of the prior session, the long white or red body, in this case this. We're certainly not seeing that. I think what we are seeing is some consolidation in the market right now, and not really profit taking as much as a little bit of consolidation. Now, fundamentally, people are beginning to focus. There's a two-day meeting of the U.S. Federal Reserve Open Market Committee, and that's going to begin Tuesday morning and ends Wednesday afternoon. It's kind of expected right now that the Federal Reserve itself isn't going to raise interest rates. However, the wording of their statements are something that you always have to look at closely to see if there's any clues as to where they're going to be going interim term. Now, what I have done is I have put up the euro-dollar gold spread, and that's forming an interesting pattern also. The pattern that we're seeing in there, of course, we hit these record tops, these all-time historical highs. This would be considered a hangman, and this would be considered a shooting star, these two candles in here. It does seem to be that the euro-dollar is under a lot more pressure right now to retreat than the U.S. dollar because it is at all-time highs. We'll talk about one of the strategies towards the end. One of the things is, if we do see some weakness develop in this market, my recommendation is going to be to take an equal position on the short side of the euro dollar if in fact the market is under pressure, and in that way we'll basically hedge our bets as it moves down, and we will lift, meaning we will cover the short once we hit a support area in the gold market basis, the US dollar spread. So that's one way to protect ourselves, and that's a hedge I'm going to be looking at through this week if we do see any kind of continuation of defined pressure. Now, going back and focusing in on the gold US dollar spread, technically we still have to be overall bullish. We still are at an 11-week high. The market has shown some great movement to the upside, and so that personally, in terms of technical abilities, we are still in a bullish uptrend. Now, the next price objective or target, where are we looking for resistance, has to be based on our Fibonacci numbers. I have gone ahead and put our Fibonacci retracement levels back up. Again, we are drawing them here from this low just below 990, the last stab before it broke 1,000 and hit our record tops back up here at 1221. And specific attention that we want to pay I believe, is at this 1168 to 1170 area. This is our 23% retracement area. Now, we're certainly not there yet, but I think that right now we are still, of course, as I said before, in that defined 12-week high. We've got a nice movement to the upside here, and I feel fairly comfortable that that market will continue to trade higher. So, what is my recommendation? Obviously, maintain our position that we took at 1155. Our stop is going to remain the same at 1120. Our strategy is going to be to see how the market trades throughout the week. If we do find defined pressure, my sentiment is the euro dollar gold spread will be under more pressure than the US dollar gold spread, and we would look to hedge by instituting a short position in the euro dollar gold spread, maintain our long position in the US dollar gold spread, look to lift it. If in fact the market came under pressure, I think it would ultimately find support right here at 1133. But right now, traders, I'm not really looking for that to happen. We've simply got an inside trading day. I need to see more confirmation that the market's going to be under pressure. It certainly is not right now. So my target right now is to see if it can trade higher, how it reacts if and when it gets to that 1170 area. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. And as always, I'm wishing you good trading. Bye bye. Talk to you on Tuesday.